Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Today, we've got a special guest coming back on the show. We've got Francis, the market sniper, the crypto sniper, and last but not least, the reset sniper here today to talk to us a little bit about what's going on in markets, because a lot's been going down over the past couple of weeks, and hopefully we can get a little bit of clarity out of Francis.
Hey, welcome. Thank you for the welcome. I'm glad to be back. Minor elective surgery. I'm fine and all good. Glad to be with you again.
Yeah, and there's just been so much going on that I think people are almost in. Things are getting disorderly out there for the cryptocurrency market. Something that you've been warning about for a while now. You've not just been warning about a downturn for the cryptocurrency market. We've also been following your equity calls for the likes of your Nasdaq Composite and a number of others. Maybe you could tell us a little bit about what you think happens now, because there's a lot going on. And I also want to talk to you about the Terra Luna situation a little bit within this video as well.
Sure. We've been warning that the macro is driving everything. This is the key issue. And with reference to even the Terra Luna, loading up on Bitcoin collateral, when we are having a dollar dominant stage and you're running a dollar-based stable coin, is a bit like me borrowing dollars to spend in rands and having to pay dollars back and not understanding that there's a currency risk. And the usual economic hitman is pump the dollar, crash the emerging currencies, and then I'm now owned. And you get to dictate the terms under which I can continue to run my country or have my assets, etc., etc. I think that was really, really foolish. I think the timing was bad. I raised my eyes at the time, and it was always, we're using the pristine collateral of Bitcoin, pumpamentals, everybody going like this, and everybody was retweeting it, and Luna chooses Bitcoin, and this is going to be a new driver for Bitcoin. And I thought, you what? I'm looking at so many downsides, and you're meant to retain a dollar. So that to me, there's two feelings about it. There's two aspects to this whole thing. A, it was badly run, that decision, and I think they don't get to make it. People are asking, what should I do? Should I sell my UST? What should I sell my Luna? Well, Luna's so low now, it's almost a moot point. But the key element is I don't think they make it. There's two reasons why I say that. One is you've shown very bad management aspects and thinking by electing in what I called and considered a bear market and a reversal from 55s. We've been warning on the downside to collateralize in the correlated asset, not the stable coin you're meant to be retaining. So that just, you don't deserve a second chance. Two, if you look at the number of people who warned him about the vulnerabilities to the mechanisms he set up, which were far from easy to understand by most people. I would still argue I don't fully understand it to this very day. And that he had various attack vectors that could be taken out of him. If you want to mark yourself out and create pumpamentals, be a hype, be a big ass front man, and you're not going to listen to those vulnerabilities, and you then end up being taken out. There's clips I've seen where he says, yes, 95% of these tokens won't even exist anymore, haha, but it's going to be entertaining seeing them go down. There's clips where a chap called Reynolds, with an A, actually Reynolds maybe, warned him exactly how you go through a takedown attack, first accumulating some UST. And he was like, I just saw the dumbest thread in my life. So there was arrogance, hubris. I think it's young, a lack of maturity, youth, and bad decision-making. And people like that wreck people in crypto don't deserve a second chance. I am quite empirical. I've got the Viking mentality. You traitor once, it's off with your head. I don't have this more American, oh, let him, Phoenix back up again. He made a mistake and all of this. I felt the same way with Alex Saunders, who's now showing his head again. I feel the same way with anybody. People that have shown a propensity to wreck people with investment funds or projects. It's one of the reasons I don't get involved in them myself, because if it ever goes wrong, and I would really make an incredible effort to make sure it was fair and viable, you still have the vagaries of a market potentially. People are still going to hate you at pumps and dumps. I'm seeing even Raul getting horrible Twitter feed on the back of that because, you know, he touched a little bit on Luna at some point and he did this and he kind of was exponential age and was maybe moved away a little bit from his roots. He hasn't even set up a fund and wrecked anybody. He's just been talking what he sees and what he thinks. And because he moved a little bit away from macro and didn't see this sell-off coming until a lot later, he's just got people puking all over him. So, I mean, you've got to be so careful. People get angry when they get financially hurt. These guys that have actively built badly or are scammers have gone and sought funds and then done rogue elements. They don't deserve a second chance. It's off with their head, as far as I'm concerned. And can I say, just in pre-talking without getting into any names, there's still others out there and some of the scales are huge. And it's usually when the tide goes out, like now, that you see who sits naked in the once was sea and now in the mud. And this is starting to expose a lot of the weaknesses and the whole exponential everything. And that will happen and it will come because they, Reset Sniper, part of my brand speaking, wanted to come, but they also want to control everything. The key point I always make with these attack vectors, which may have come from Citadel, it's all assumption, but quite possible. Citadel is like the financial hedge fund attack vector as BlackRock is the balance sheet property accumulator for the dark state and the special ones. The chosen ones, whatever you want to call them, the legacy long money. And it's I would say it's a very good guess, and they would have understood it and worked this thing out. And the other key point is everybody, damn, it's an attack on crypto. No, it's an attack on a bad project that was badly designed, that looked weak. Nature is like that. One of the reasons they use certain lures in fishing where it twitches like it's a little bit, the fish is a little bit injured or schizo, is because it triggers the natural homing instinct to kill the weak in a predator. The easy food, they eat the babies, you know, when they're hunting the bucks and the injured. That's how it self-perpetuates. Nature is designed to self-perpetuate the best genes. You know, and as a result, that is what happens. And they were the twitching, injured baby Bambi in the market, and you get killed. So even if it wasn't Citadel, that was a natural force of nature. Then you look at how quick the Fed was to respond to that in terms of Yellen making a comment virtually the same day. It tells me that whoever did that attack probably has intel on the Fed, and everyone was like, oh, that was an attack on crypto. Thank God, you know, it's over. They went from 42K, one of our key levels of significance that we've continued to repeat, by the way. I'll stick this up on the charts. This was one of the things we highlighted. 42K is a massive number on crypto. We were highlighting that this is a neckline on a head and shoulders that keeps being respected because you saw these interactions. These orange circles have been here for 6 months on this chart. And this 42K runs diagonally through this bear flag, literally. And then I tweeted out, this is a very precarious point for crypto. We can find that tweet for you as we were breaking this ascending Rhine line at the bottom right corner, just sub the 42K, which is that lilac blue line. So they were 42K and they were saying, yeah, down to 31 because that was the low at the time. And I was like, you think 31 is the low? You think they're just making 10 grand on Bitcoin? They've done all of this attack. You think they haven't got the Fed at their back that's going to do further tightening? You think that yield is not going to in time go higher? You think that dollar index that we've warned everybody? And, you know, when I went on to Real Vision, I kept wanting to talk macro FX, and the guys wanted to push me to comment on crypto. This was all during the period that we're doing this and churning. And I'm like, the action is in the debt market. The action is in the FX market, and it's coming to eat you in time. And it's not a good thing. It was showing the major end for debt. You know, another thing, if I can bolt this on, that's taking us a little bit outside of the subject of crypto, but is totally to do with crypto, is that literally for the better part of nearly 2 years, we're talking July, September, August of 2020, we said, you know what? The way this yield is recovering, this looks like we had the final capitulation in yields and the final blow-off upside in debt. We called a turn in a 40-year BTFD memed trend in debt. And we were the only ones. We were the only ones. And literally 2-3 weeks ago, I saw Mike Maloney for the very first time, and then Crypto Bird say, hey, did we see in 2020 the end of the debt market? Guys, for crypto to win and to take over, the old horse has to die. It is a debt-based system. Why on hell? Everybody's a macro chartist. Everyone thinks they're a contrarian. Why are we the only guys that were watching the debt market? Why were we the only guys? If you're a macro chartist and you're looking at a log scale, why did you not say final capitulation? Technical analysis 101. Log scale that move from well over 3 to 0.3. You're talking about a tenth. You lost 90% in yield into the 2019 high, into the low. The event of March 2020, that I will avoid saying the name of, was utterly the end of the debt market, because they created 7 trillion. It was the beginning of a future inflation market that no one saw. Now everyone's talking about inflation. Where were the contrarians? Where were the macro chartists? I've been saying we aren't the best macro chartists. We're the only macro chartist. Because if you were looking at a monthly chart, how did you not come to the conclusion that we were seeing a final end in debt? Plus you have the reset sniper in our brand, which says they want to bring in a new system. And you know you are on a debt-based system. And I'm watching all the currencies kill it. And crypto's in a holding pattern, whilst somebody is accumulating 42 at the aggregate value of 42K, which I've shown as a neckline on a head and shoulder. I've given you the fundamental story as best I can technically on the Bitcoin chart, that is going nowhere and it's being bought. 42 at 42K, 100,000 Bitcoin are being accumulated to be dumped. And you can see it in the chart, and it's a head and shoulder. Here is since the 1980s, 40-year buy the damn dip on the money side. The capital value goes up as the yield goes down. Sell the yield every time on the rally. And that was your final capitulation. And it was the exact same. And I know I've shown you this chart. I'm boring people with the amount of times I've been showing people this chart with this head and shoulders on debt. But they don't get it. They don't realize it. And now, as I say, Crypto Bird, credit to them, by the way. That's not a knock of them. Well done to Mike Maloney. I like him. He's a sincere guy. Well done to Crypto Bird. But actually, and they're the first, so they deserve credit after us. But it's a year and a half later. It's a year and a half later. This is a head and shoulder that triggered. We were in the inverted HVF short over there. I was shorting TLT and expecting a bounce on the 135. For this is how big trends end. So this entire bear cycle with any basic charting was on. It was a hugely risk-off environment. We did the exact same, which absolutely self-affirms on the dollar index.
And by the way, guys, absolutely nothing's changed. It's still it's still risk isn't going to do well in this environment, and your bonds are actually being very correlated with the likes of the equity market and everything else in terms of going down. You know, this is huge what Francis is calling for here, and you've been calling for it for a long time. It's been very accurate so far, but this is going to change money itself when you're talking about the debt markets. And Francis alluded to a new system that is cropping up. Potentially that could be crypto, the new system that is going to essentially merge into the old one.
But first they kill it. They needed to start training people and get all the other tokens as an on-ramp training school for the eventual CBDCs. It gives them too much power for that not to happen. Go watch that Carsten's BIS clip. We can see, we can control what you buy, how much you buy. If there is inflation, we can take the tokens from the wallets in proportion to how much the inflation is. They're talking about a government access bank account where they can drop in some money, take away some money, social score you, introduce a credit system, a social system, a what you're buying system. You're seeing that already in MasterCard. Everything we've said on reset. And I've been in the reset space since 93. And I was YouTubing since 2009. And everything is happening. I mean, and we don't want to be the guy that says I'm right on everything. We're wrong on tons of things on the small time frame. On the long and macros, we've been very rarely wrong in terms of what's going down. And going back to this Dixie chart that I'm showing you, this is an absolute runaway breakout. They created an utter demand for dollars when they created 7 trillion. A large amount of it went offshore. And now they haven't topped it up and they haven't provided any more. It's like everybody gets tons of rain, everybody's got plenty of water, and then the rain stops. Then now there is an absolute thirst for dollars. This dollar index is going to go up. When they did that 7 trillion, there also was a lot more debt created that needs to be paid back in dollars. A debt-based system you continually need an expanding some monetary supply, because when you're charging interest, the person needs to give more of that money back to you than they originally got. All of these simple principles are utterly playing out in what is inherently a Ponzi scheme. And the 111, by the way, the 111 is a geometric target generated from here. It doesn't mean it's the end of the move. We are expecting a blow off. And can I also say, I'll take crypto guys to charts like the Korean won, which is literally a monthly crypto type chart. It looks like this, friends. That's your Korean won. Wow. There's an Asian crisis in play right now that is occurring. This is a macro HVF. We've owned this. We've been the only people talking about this pair for the last part of 4 years since this was first made in 2016 watching. I even got faked in on that and I ate red on the loss and the pullback of the 7 trillion. I lost in there. I'm back in it now. The COVID events, I've gone and said it, was the sell-off here that created the ultimate max demand for dollars. You are in a runaway breakout that, in our opinion, is going to lead to a dollar spike that will make that 111 target look conservative on the Dixie index.
That is not good for crypto. That's not good for anything.
Awful.
And I love how you phrase that, actually, because this is what people look at March 2020 and they only relate it to the event. They don't understand that monetary policy was unmeasured, to say the least. But the problem that you've got with that monetary policy is we've gone from extremely inflationary to now looking at deflationary moving forwards, which is going to kill off equities, cryptos. We're even seeing gold and the likes of that sort of come off during this environment because people are running for the dollar. And that demand that was organically due to monetary policy pent up and is now happening is being accelerated because you've also got fear in your equity and crypto market. So people are going to be plying into it even more than they already are, on top of a failing emerging currencies.
Let me tell you, far worse and bigger scale than wrecking ball on crypto. It's a wrecking ball of other major financial FX pairs. I expect the Hong Kong dollar to fall in this event. I expect the Korean won to near halven from when we called it. It's now already moved quite a bit. It's traded 1,290s, but it's still got 80% devaluation further to go. I'm expecting equity markets to have cyclical, serious, ongoing bear that everyone thinks, oh, we were getting so ripped off. Your head and shoulders are ugly. No, my friend, I've been studying head and shoulders for so long. I've done a course for hours with slides on complexity in head and shoulders with upside HVF left shoulders and inverted right shoulders. What people have yet to learn when we write this book will be economic and financial technical analysis. Until then, it's taught. Until then, it is taught in our community. And every single US index is in a macro head and shoulder. And they've all triggered. And the NASDAQ one is bigger and has further to go and is a higher beta. ARK, I've got puts on ARK. Everyone, oh, it's the bottom. 2 weeks ago on Wednesday, everybody was wailing in. This is the bottom on ARK, and it got a weak little rally. I was like, Good luck with that. That's like the guys whaling into Luna at $1 and finding it trade 30 cents. Listen, you can always, oh, it's so low, I can't lose any money. Just take 99% of your money off and you've lost money. Yes. I don't care if you got in at $1. If it's now a cent, you've lost money. If you got in at a cent, go take it all off and have one sat. See if, and show me how much money you've lost. There is no buying value that doesn't see you lose money. Just minus 99%. That's all. And you've lost most of your money.
I absolutely hate when I see, I saw lots of tweets about Phantom, which is another layer one blockchain. And people saying it's 80% down. How on earth can it go much lower? It can go 99% lower. That's how much lower it can go. And when people say this, they've neglected where's the bid coming for these markets?
The principle here is lack of maturity. There is no money management. You buy an 80% down token, just take 99.99% off that value. And that's how much you can lose. In fact, you can lose the whole enchilada, of course. But I'm just saying, you know, let's say you still hold something and financially no one's tapped them on the shoulder and said, time to leave, you can't pay your fees to be hosted on our centralized exchange anymore. Let's say that event has not yet happened. Just take 99.99% off of your money. And it doesn't matter what level you've got, how much it's fallen. That's just a scaling from an all-time high that clearly is not being retained and doesn't reflect current market conditions. Or the fundamentals of that token, or the sentiment towards that token. So there's a lot of dip. Here's where everybody's making mistakes. A lot of dip buying mentality. It is exactly, if I'm the fisherman with the epileptic fish twitching like this with a shiny ass spoon lure, everybody is now the fish that wants to grab it because they think it's 80% down, it's 90% down, and I'm the bear market fisherman, and I'm just saying, have a little nibble, son. Have a little nibble. Look at that twitchy, half-dead fish. You don't have to chase him too far. You're going to have a great meal. And everyone's in there. I had very early people that had joined our community. Can I buy a Luna at $28? I was like, no, you don't buy a Luna at $28. Same day, sub one. Yep. I said, you would have lost 27 over 28 of everything you put in there. Oh, no, but I would have done small. I would have done, yeah, don't validate and justify. Knife catching is a finger-losing activity. Simple. Don't do it. We wait for technical upside structures before you call bottoms. The news must be terrible. There's too many bottom callers. You want misery. You want absolute misery and loss of money with very few people with a cent left to sell. You want to be spent. Bear markets are over when you've bled every little bit. It's like, unfortunately, it's like a boil. You've got to drain the bugger until the pain is sharp and it doesn't come yellow anymore. It doesn't even come pink blood. It's hard red blood, and it's hard red blood for a while. Then you've probably cleaned the wound. Now you can start talking repair, which is basing low volatility, small inverted head and shoulders into nestled, bigger inverted head and shoulders, etc., etc., etc. That's when you start thinking about buying, and you must recognize you're going against the macro trend, and you talk about recovery. And I would wait for stimulus news. I would wait for other markets to be absolutely broken. It's all still to happen. I mean, if I go back and I show you the NASDAQ, this is how much further. Yeah, go ahead.
Whilst you're bringing that chart up, this is it. We're waiting for stimulus. One thing that people need to watch right now is the Fed doing a 180. That is not in the agenda anytime soon. And in actual fact, we've not really seen the full effects yet, even though markets have sold off to the degree that they already have, of monetary tightening. That's still to come. Not a good outlook across the board. And what you were saying about markets need to be in pure disarray. They need to be hurting to a degree that we haven't yet seen before we start to look at a bottom structure. We're not there yet. And this is what people need to understand. And there's definitely, in my opinion, and I'm sure yours as well, more lower price action to be had that we're nowhere near yet, I don't think. And things get, I mean, the equity market, the head and shoulders targets that you had for the likes of the NASDAQ and stuff like that, they're not reached yet. What happens if those targets get met? Crypto at that point is going to be significantly lower. But there is an upside to this in the sense that, you know, crypto isn't going anywhere. And if you pick the right tokens, I think they're going to become extremely attractive at lower prices for the next cycle, because things rinse and repeat.
Absolutely. And everybody was like, why didn't I buy truckloads of Bitcoin at 3,990 or whatever it traded, just sub 4K at the bottom of the pandemic of 2020. I mean, this has really just properly triggered this NASDAQ head and shoulders for us with a 12,750 neckline. And you got an update today. This could rally. It could rally even up to the neckline. I don't think it will. There's too much weakness. There's too much uncertainty. They would have to do a lot of backpedaling vocally from the Fed. Short of anything coming out of the Fed, you're not going to rally for too long. Plus, there's Friday tomorrow, which has been a horrible day consistently for crypto and risk generally. People are petrified of what's going to get said, done, or will happen over the weekend. You've got a hot war that could escalate. You've got all sorts of various down. All the risks are downside. Where's this out of the blue moon upside risk? It doesn't exist. It doesn't exist. There's nothing that could suddenly come. It could come when we've had complete fear and they pivot stimulus and they then go even bigger because everyone's hurt or crying and they overshoot in the next stimulus. We're not there yet. It can't. There is very little stimulus risk. You've got this head and shoulder to come. And let me just, this is on a 3-day chart. You've got to get down to 9. You're trading 11.5. In percentage terms, that's vast. That still has to fall from highs. And going to the monthly, let me just switch the eyes off there. You've got a long, long way you could come down. You've got a long, long way you could come down. You could come to 4.4. You could come to the tops of that, 2.8. You could come anywhere. The truth of the matter is none of us really know. If you got down to the events of the pandemic, you could get to 6. We're at nearly 12. And you broke on a neckline of 12.75. That's a 50% collapse from the neckline, not even from the top. You could do a plus 50 collapse. How's your Bitcoin going to look there in that environment? Well, here's an example of something that is higher risk, high growth, doesn't have much yield, and how it's done. And this was the other group of people that I've had to debunk. We're going to get a 50% run in the stock market before there's any plunge. In 6 months, a whole view, and getting so much time and wealthy on.
Do you know what I think? Do you know what I think they based a lot of that off? You were one of the people that educated me about the yield curve, and we've had you on. We have you on monthly now, so thank you very much for that. But you were one of the people that educated me on the yield curve. I think people were looking at that inversion and going, "It's okay, guys. We've got anywhere up to 2 years to go. Don't worry, it's going to be fine." When everything, well, you only had to do a little bit of digging, was suggesting that just simply was not the case. And they were literally basing their thesis for markets rallying off prior times from the yield curve to an actual capitulation event taking place. It just seems idiotic. This is where prior data is more of a hindrance sometimes than it is a blessing.
Well, it takes me back to my comment. We aren't the best macro technical chartists. We're the only macro technical chartists. Because if you didn't see a blow-off in tech from the March 2020 lows, here's an extreme example in case, around about $33 to $160 in 18 months. You've round trip. This is called the classic blow-off and round trip. And actually, since the inverted HVF, learn HVF method, themarketsniper.com, you are actually in a more violent throwdown than you even managed in your pumpermental out of a megaphone on a bull pole on the upside. And in case you think, wow, that's ARK, it's super high beta. Well, let's take you into some bigger names. You didn't get a 50% blow off in Schmoogle. Here you go, $1,000. High, $3,000. 3x on something that was already $1 trillion market cap in 18 months to sub 2 years. You haven't had your blow off yet. Who are these people? They're not macro technical chartists. We need a 50% before we can dump. And I'm like, what's wrong with 3x before you dump? What's wrong with 10x before you dump? And you think it's just Google. Have a look at our friend Amazon. Have a look at our friend Netflix. And there's macro head and shoulders on all of them. And we've drawn them all. We've shared them all, just like we did for the indices. These are your drivers of the NASDAQ. These are your drivers of the NASDAQ. These are they. And there's a broadening high volatility right shoulder These are your drivers of the NASDAQ. You went from the lows of March 2020 from around just above 1,600 to 3,800. Is that not a blow-off on something that's already a trillion market cap that relies on retail consumers, and retail consumers are currently getting crushed? Is that not a valuation spike from 1,600 to almost 4,000 on a declining consumer? Are you kidding me? Who are these people? They don't open monthly charts. They don't look at monthly charts. So we've had the blow-off brigade, and we've had every other, the buy the dip brigade, and people just don't listen. I mean, Tesla's got more downside to come. Netflix, here's another one, growth, relying on the consumer. Really? Where were you in March? Here's where you were in the low of March. By the way, we had upside HVF structure. We called it, you traded it, there it went, it made its target. In fact, I've probably got that already drawn on. If I just put the eye back on, it's all there. There was your target. You should have been out here. You see that low volatility, terrible pancaking structure? That's a final little move up. By the way, 650. What was the low in March 2020? You came down to 265, 265 to 675. You haven't spotted a blow-off yet? Who are you? You're not a chartist. You're not someone who's looking at the big time frame charts. So, I mean, to me, there's a lot of misguided garbage being chucked out by a lot of people that haven't realized exactly where we are. And my sole game is, can I be the compass of truth to the best of my ability, recognizing I'm a human and can utterly be wrong in many times, but not through hubris and malintent. Follow the footsteps in the sand. It tells you who you're following. It tells you if it's a hippo or if it's a buck. It tells you if it's a tiger. Follow it. Don't listen. Everyone else is narrative driven. People are only talking about debt failure because it's become all about inflation and yields and the debt market. Where were you? Where were you in that final capitulation? You've got to be forward looking. We have a principle. We create words because there aren't words for us in our trading language. Scenario casting, the act of forecasting without committing to a specific outcome and having multiple potential scenarios. We have to create the word because it doesn't exist in the English goddamn language to be future looking in many multiple possible directions without becoming a believer in any one. A forecast is a believer in one. And we have to create the language. You need to do this. And this is what HVF method does to say, hey, that's a final capitulation. It's starting to snap back. This is July 2020. Could it be that that's by falling 10x in yield and pumping blow off on the capital bonds is your final part of a bond market when they're telling us that they want to do a reset? You know the old horse is going to die. What? To me, it's so obvious. Now, remember, we're looking in retrospect. Now, there was no talk of inflation in March 2020. There was no talk of inflation in July 2020. There was no talk of inflation in August 2020. It takes a while to come, but it's properly in the system and has been now for 6 months when they were still jabbering about transitory, and it was starting to show. Where are the truly forward-looking, insightful macro-technical analysts? There are none out there. And I'm talking about Goldman Sachs. I read Zero Hedge. I read Alpha, Wati. I read every flippant people, and I'm not seeing the big time frame forecasters. They're only just coming out on debt now. So it's very, very frustrating. We feel like the Cassandra. The man who actually, the woman who actually saw what was coming and no one believed him. And then you wait to be recognized. Then everyone else is getting plaudits. Oh, yes. What's his name? The one who works for the Swiss bank. Hilton. What was his name? Polzar, the genius of working in there, is now saying it's time to think the unthinkable. And I'm like, oh, nice of you to show up a year and a half later, but and the genius, is the best financial, the UBS, no. This is a controlled leak of what the bankers already know have been going out there. We told you when it happened, this is how we're going to pivot. So the game, anyway, enough we told you so. I'm sorry, it's a terrible to do we told you, but it's frustrating because people have to see what happened to understand why they weren't coming to the same conclusions. So next time they will. It's about learning. So I don't do this all ego.
No,
we get tons wrong. We get absolutely tons wrong, but most of that's on the small time frame. Big time frames, you don't tend to get stuff wrong because it moves slowly. It takes a long time, and you get to sleep on your hypothesis days and days. It's not just one day when you're a pumpermentals full of coffee and any other stimulants that you then go, that's going to happen. You get a chance to review regularly on macro. You shouldn't be getting macro along, but people don't do macro. People don't do macro. I've taken crypto guys into macro Bitcoin charts on monthlies and said, shooting star, this is a relative high too at the 14K. You're actually going down. No, to the moon. We're taking out the 20K high. Crash, bang, crash, bang. You trade sub 4K at the bottom of the COVID spill. So, I mean, it's frustrating. People don't do macro charting, and crypto people are more impatient. They want more pumpermentals. They want it now. And actually, they're going to get dumpermentals, and they'll be miserable. But that will set up the next cycle if Bitcoin's allowed to survive. Reset Sniper says they always hated stables. Stables are their great enemy because stables give us benefits like the dollar, but fast moving, etc., 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 much quicker, easier to use. That replicate their central bank digital tokens future, but has none of their controls on it. And actually, in some ways, you could get money market type yields. Obviously, that's changed a little bit with Anchor Protocol and the Luna situation, but you could actually get some real monetary policy instead of having your money trapped in a bank earning 0.25 end out to you on your credit card at 29 or 16%, etc. So, yeah, it's crazy.
Stable coins were definitely a target. And we spoke a little bit off camera about how, in actual fact, I mean, you've already got BlackRock, the main custodial. It was JP Morgan, I think, before them. And the Luna situation, we saw the attack from the United States regulators on Celsius. The Luna situation has somewhat shortly followed that, and in actual fact is paving the way. You've given regulators every single reason they need to step into the stablecoin space and regulate it however the hell they want it and pave the way for CBDCs. And I just want to bring up a point about what you were saying about the mainstream narrative in regards to finance. It's exactly the same as the mainstream narrative in regards to science, in regards to history, in regards to everything. These guys have to follow a narrative or their careers get damaged. So that's an absolute pearl of wisdom, by the way, for people that haven't yet realized that perhaps the world isn't all that you've been told it is.
Every narrative is controlled.
Absolutely.
Historical narrative, scientific narrative, financial and economic narrative. You're not giving the real truth in schools. You are led down the road where they repeat ad nauseum hammer. They make you learn it by rote and write tests on it so that they are imprinting psychologically in you what they want you to believe. They are selling you a belief system that they control of who is hero and who is victim. You need to unlearn every piece of bullshit that was hammered into your brain. You need to go back to basics. You need to find true sources of wisdom, and you have to rebuild yourself as a human fucking being, starting with your mind, your physicality, and your understanding until you know who the real enemy is. And it's your dark state, it's your government, it's your chosen ones. And you've got to, once you start that process, you're never looking at the world again. It's a much bigger project than you realize. Find other people that strive towards hard truth, that are unpopular, that don't. Everything that moons, that involves YouTube or Google suddenly, Lunar Moon suddenly, extreme growth, flawed model. Some of these YouTube channels out of the blue mooned while ours doesn't. We don't get shown. We got guys telling us all the time they're being unsubscribed. The bell is, they hit always, and it's been unalways put back to discretion. We've had people unsubscribed from our channel. Now, I'm not trying to put myself as a victim. I'm not. And I've seen particularly people with rogue intent often do very, very well on their YouTube channels. But we better not get into too many of those. So we'll end up in lawsuits.
So we don't want any of those. So Francis, what are you looking at? You know, the consensus that we're trying to give off here is, look, markets are still in trouble. Nothing's changed. And in actual fact, if nothing's changed and we don't see, people need to watch the Fed closely. because everything they say, I mean, it's
What's
like
the chart closer still? The big time frame chart. The bottom is only after a long-term extreme crushing of volatility, from high volatility to low volatility with clear-cut reversal structure. Watch for further. Suspect continuation before reversal. Always suspect continuation before reversal. Third time, it's more likely that a chart builds a structure with weak rallies that end up leading to later continuation than reversal. This is the law of momentum. Things can keep on moving generally in the original direction until equal and opposite forces overwhelm it and then become greater than it to move it in the opposite direction. We are not at that point yet. Most things are continuation. Despite us talking about head and shoulders on 40-year cycles. But when you do get the big reversal, we are early stage in macro reversals with high momentum. So what do people do? So let's pivot from the I told you so to the what can you do? There's two core narratives. There's the inflation trade for building wealth. And we'll be talking to Rick Rule later on today. I'm really excited for that. That's our first time. Watch that. Subscribe to the marketsniper.com and the Crypto Sniper.
Links in the description.
Thank you. Yes. Rick is funny as hell, and he's smart as hell, and he's rich as hell, and he calls bullshit on the current system as much as I do, if not more. And then there is the fear trade. We are in the fear trade. So you get ratcheted at two different levels. It's a bit like your Democrats and your Republicans, your Tories and your Labour. Different parts of agendas get moved in different parts of the cycle. They want to hyper-socialize everyone and put everyone in welfare. That happens when the Democrats are in power and Labour is in power in the UK. Or in Australia, quite likely as well. When they want to expand the military-industrial complex spending, they wait for the Republicans and the Tories, et cetera, et cetera. So they are ratcheting up ever greater expenditure into their pet projects, where they're often on shareholders with the contractors, and there's companies like Halliburton that go in between, or broker dealers that are charging X and it only costs half X, and skimming and all of that scamming that's going on. So Ukraine, the biolabs, all that fun, you can go run down a rabbit and multiple rabbit holes there. They are all scamming in there. But the key element is right now we are in the fear trade. That is money destruction. Why do I say money destruction? Because those bonds are actually assets. We have a T-bill accounting. It's a liability and it's an asset. It's an asset on somebody else's balance sheet. A pension fund, for example, will have a lot of debt in it. That is currently contracting like that, getting smaller and smaller. As the yields go higher and higher, the capital value is reducing. So you have a situation. By the way, USDT has treasuries as collateral. Now, it's not nearly as exposed and as high beta as Bitcoin like UST did, but it's not the same as having dollars in a bank, because you bought an asset that is collapsing. So don't think that the first stable coin to go is the only stable coin to go. If they're destroying debt, holding treasuries is not a good idea for assets. You want cash in a bank, but then you have bank risk, you have hack risk, a la Charles Schwab. So it's a bloody difficult thing to have a stable coin. I don't know what I would do. You might need relationships with 30 different banks in 30 different locations, keeping just cash on call to be 100%, tight. So people are holding treasuries. For now, it's seen as pristine collateral. It's not. Like, treasuries can go to zero. They can do a debt jubilee in time. The rates can super spike. The dollar will super spike. All the currencies will be killed next to it. All the emerging currencies, they want to kill emerging currencies. We're going to have regional currencies. Why does there need to be a Senegalese currency? Why does there need? This is their thinking. A Congo. Why do you need a Burundi specific currency?
We're actually seeing that play out in Sri Lanka right now.
Yeah. Why does Guinea-Bissau or Sri Lanka need their own currency? You're going to have zonal owned hubs. They're turning this in. The world is a blockchain with, hubs and running, what do they call it? You can own if you have enough Ethereum, what do you call it? A validator. A node. No, thank you for the word. So you're going to have the subcontinental node. You'll have the Southern African node. You'll have the North African node, the Middle Eastern, and all of this. They're going to melt. They're going to simplify this thing a lot down, and you're going to be clumped up with a bunch of others like that, just like the euro. But funny enough, the irony is we need the euro almost to fail to go into a new node that will be based on CBDCs, and they'll just rinse and repeat and redo this whole thing. So this is where, in essence, I see things going. So how do you do it? You've got to kill all these emerging currencies. So you all saw what happened to the Sri Lankan rupee. Well, by the way, the Indian INR has been terrible. I mean, again, guys are crypto, and they'll say, well, why are you showing me this other stuff? Because I am telling you, this is the foreplay to the end game fuckery of crypto CBDCs. This is the foreplay of crushing big continents' currencies. This is the Indian rupee in a month against the dollar. How do you like them apples? Wow. This is since 1981. This is the Indian rupee. The only thing is a melt-up that comes out of this at some point, in my opinion. I mean, even against real majors like the Japanese yen, and India's a huge, you're talking about the most populous nation. I think they've overtaken China now.
Yep, they have.
The birth control regime that China has had. And it's an absolutely vast, and it's an English language speaking nation. This is something we said would happen. And we said, the first target is 136. You expect overperformance. This has absolutely smashed it. The crypto trading has been in FX, which was why, as I say, they pigeonholed me because I did a lot of crypto work at Real Revision, and they brought me on as a crypto commentator. And I think they pivoted overly crypto, and morale left a little bit of his macro roots behind a bit, because when I went on there, I just wanted to show them, here's all your best trades. In crypto, there weren't any good trades. It was looking weak and soft, and we're waiting it for the breakdown. And people hate the bears. If there's full of, you know, immature kids that hate the bears. We've been saying defense, be in dollar, Dixie going up, be in dollar. There's two parts to Bitcoin. People talk like it's just Bitcoin, the price of Bitcoin. They don't realize they FX pair trading. You are trading a potential currency valuation store of value against an aging one that is highly dominant, that could actually have a final death spiral of strength before it is eventually retired and be used as the stick to break all the other ones, so that everybody says, we can't have this dollar anymore, it's too strong. And a blow-off spike of great volatility and the lack of stability in the currency markets will be part of the reason to bring in this new system. We can't ever have that happen again. One nation, major currency move like this. Oh, listen to all the politicians talking. We need a more stable, and we will do this, and they'll bring the whole thing in. So how do they break it? You can trade this. The crypto trades have been in FX and debt markets at the moment. And now, more recently, we've been getting short. And nobody likes a shorter when everyone else is in pain. That's one thing I've learned. You know, I never take glee or delight in anybody else's pain. But if it's raining, go out in a raincoat. Don't run out in your Bermuda shorts. If it's snowing, don't run out in your Bermuda shorts. All that's happened is you failed, and you have to own this, because you're either victim or you're someone who owns your outcome. And we always check. Everyone who joins our community, we have a call. And I say, anybody who sounds like he doesn't own his outcome, that just thinks he's getting a pure trade feed and will cry if you get anything wrong, is not suitable. We turn people away from joining that have the money. And the key thing is, I'm looking for maturity and owning your outcome. If you own your outcome, you say, actually, the circumstances changed. It went from sunshine, beaches, and warm sea to snow, Alps, and freezing cold, and I ran out in my Bermuda shorts to go long. And I should have been in 5 bear skins with snow boots. And that's the thing. There are no bad markets. There's bad equipment and clothing for the market you're in. I do not wear a suit of knight's armor to go ride my MX bike, because it's inappropriate equipment for the conditions. I will not ride very well. I'll fall off a lot, and I'll have the tin ringing like in my ears. And the key thing is, people don't recognize that the circumstances changed. And that's because they were all crypto focused, and they thought crypto is it. Crypto, as I've said before, is a little paper boat in a bay on what was once flat and calm, now turns stormy. And it is being battered, and it is higher beta, and it is being smashed. And I'm afraid, I don't think it's over. I don't think these predatory forces that got involved, because there does seem to have been some planning, get involved for a small beer. And let me tell you, less than $1 billion is small beer, to be sure. Everyone like at Citadel. Let's say it is them. We don't know. I'm not accusing. It's the possible profile. They're not here because they ran it from 42 to 32. As I said, when I saw that tweet, because we were 32 at the time, it's going to go lower and quite a bit lower. So how far is that? And most people are thinking, so when do I buy? I'm probably too late to be a bear. Well, in actual cases, you quite possibly are not too late to be a bear, but I don't want to teach people in an interview how to short a market that's already spilled. So let's assume you are already...
And shorting the market right now, certainly if you're using any kind of leverage, and I know this from I've got liquidated in the past week a number of times. Not liquidated in terms of my account, but certainly had certain positions liquidated, because we've seen... You can get some of the harshest rallies during these downtrends. Maker was one that you were following, actually. You gave out some amazing shorts, by the way, for free, free alpha. Maker was one that I was watching after you had mentioned it. So thank you very much for that. That was actually one that I managed to hold in very well, given where we got in at. But the Maker chart, that was volatile like all hell. I mean, that was just insane. I wonder how many people got taken out there.
A lot. I actually had 3 positions, and I had one small one closed on that. Even I got, and the reason why is because I'd broken my own rules and I'd added to the position. Your stop should have been just above that blue line where the dotted red line is. You would have been absolutely fine. And let me tell you, that's such an exhaustive bull run that sets up the spill that we've called deep down to 375. So that's actually very good for your trade. And more importantly, you properly ran your second interim and a legacy interim level as well. So it's absolutely natural and highly compliant that you ran those 2 levels and then had some form of a reaction as well. So this is where the technicals and the narrative totally dovetail, because I think my best understanding, I'm no master on Maker's backdrop, that there's a
stable coin. Yeah, so they hugely saw massive benefit. I mean, I was sweating a little bit on that one, I'm not going to lie, but they saw huge benefit from the Luna story. And people out there still think...
Until they get attacked too. Yeah. This is why I say this is not over. This is not over. They don't think, oh, we'll clear out one of those stable coins. They want to squeeze everybody's balls till their eyes are watering. They're not going to stop there and go, we'll just grab one and give them a little tweak. This whole situation has got a lot further to play out. Do not a bottom caller be. The psychological desire to do this. I spend half my time telling people not to be buyers. It's far smarter to learn to short in a bear market than to learn to be a bear market. It's like saying it's chucking down and it's a blizzard and saying, when do I put my shorts on to go run out and play summer again? And I'm like, no, dude. Find yourself a snow jacket and some snow boots so that you can play in the current conditions and the near-term conditions, because this blizzard isn't lifting for more than a fair amount of time before you have any chance of it lifting. And then you'll still have spring before you get clear-cut summer. And that ain't Bermuda shorts and swimming weather either.
Absolutely not.
And this is the problem. People only know how to make money buying long. So the whole situation, and this is the key element of method, a stop, you are only a true trader once you've made money on the south side. And let me tell you, it comes faster and more furiously than any other side. But in the absence of method, don't even try it. Any aspect of leverage, everything you said, absolutely good advice. Most people watching this should just be not hurt. And you're already doing 95% better than 99% of the people, because they can't help themselves catching falling knives and donating fingers for my barbecue here.
Including myself. Yeah, I've got a very, or I believe I've got a risk strategy. But even myself, I found myself when everything was coming off, you know, I'm not immune to it. I have methods of dealing with the sort of FOMO, like I go out for a bike ride or something like that and get myself out of the house and away from the computer. But I can't tell you how many, and it's bad practice, I was one of those people catching falling knives. Sometimes it paid off. Typically, it wouldn't, and I just killed that monster whilst it was small. But you've given amazing trades for free. Free alpha on, all the links to Francis' stuff is in the description. Tezos was a fantastic one. You could have had them
earlier, sooner, before they broke, with the real stops right at the beginning and the full macro reward if you're in the premium community. But you know what? We still want to help people, and so they can be added on and it doesn't hurt us. Let me make a comment for you in terms of where things are. You just had a major spill and you've got a hammer here now on a second interim run on Tezos. You know what's going to happen? That everyone's going to call bottoms. You're going to start to rally for a little bit and you're going to go up. That's a major hammer. It's quite a significant high volatility hammer. I would expect a possibility. I'm not saying it absolutely will happen. Now, never trade longs on rallies in a macro short market. Don't even think about buying this and doing it because A, there's no way of knowing how far. B, it can fizzle any moment and spill. You've got Friday coming tomorrow. Don't do it. But I know how people think and they're going to, oh, I'll never mind what he says. I'll just take a little bit of risk. I won't have a stop here, etc. Your stop, the only way you can survive your stop's got to be down there. You're getting in here. That's miles away. You're going to get some form of rally and churn, and we're not going to make progress for a while. And people are going to come onto the feed and say, he's wrong. It looks like a bottom. We're slowing down. We're slowing down. And then the next wave comes, and then you run the 105. You're going to probably fall sub $1 on Tezos, where we were telling you at 3.2 to get short. 3.2 to sub $1. Think and listen to what I just said. We gave you 70% decimation of market cap call, if and when that happens. Remember, you heard it. Not only that, we gave you Elrond, EGLD. We gave a lot of them, and they're all in various stages of completion. We discussed and provided Crow. Crow already made its target and has got overperformance coming its way. This little fella, and I was desperate to get my 10% cash back on my card. I've got a number of big purchases I was making, and I was like, I'm not buying this at 50. It was round about then. This is too small, this impulse. It's going to turn into an inverted. I'm bearish on crypto. I sat with a substantial sum that's been in stable all the time. Now you can go buy what you thought of buying at 50 for 17. Would I buy? No, it's just ahead of the spill. And let me tell you, these guys have got deep pockets. They're sponsoring UFC. They're sponsoring Formula One. These guys are making an absolute mint, but not right now, I don't think. But they've spent an absolute mint. This is a big, I don't think they're going away. I think they will be coming back. So I'm expecting to buy it at some point. But I'm like the many guys in your community that will be watching us. They want to be buyers. Actually, you should have shorted it. You should have shorted it. And even though it's got a rally coming now, note how this one's made target and the other one's made second interim. Both of them imply a rally. So you're going to get that rally and everyone's going to go, yeah, you're too bearish. You're just always too bearish. You know, this crypto's changing the world, yada, yada, exponential age, chat. And I'm like, it ain't done yet. It ain't done yet. NASDAQ ain't done yet. This ain't done yet. You could possibly have this for a cent if the NASDAQ goes a full 60% from all-time high retracement. You could be buying this for a cent or even less in terms of overperformance. But don't do it now.
People need to be extremely... People need to be extremely careful because the reason that we're talking about more downside is because that dark cloud that is your macro picture is still there. So any rally, people are going to look, in my opinion, to get the hell out of that. So just, I know we took up quite a bit of your time already, Francis. I don't suppose you could maybe just take a look at Bitcoin quickly. And it's almost impossible to tell exactly what the levels are. But my concern with where we currently are is there's actually not a lot underneath us till about 20K. There's not a lot. There's a few areas of consolidation. You've got the 20K prior high. But it's something I'm looking at and I'm thinking, hey, you know, just because we've had, yeah.
So here's the process and I'm telling you this so that you and your guests hear what you should do to answer the question that you've just asked. First of all, no emotion. I'm not doing anything immediately. I'm relaxed. I'm calm. I kick myself into the executive center of the brain, not the emotive center. And straight away, you're feeling that urge. Maybe buy. There's a dip. Look at that long wick. Reversal. No. Where are we? Okay. Here's where we are on Bitcoin. We highlighted in the bull season that this zone there was a major accumulation zone. One of the key reasons for that is that the structures that came into that zone were typical continuation structures, falling wedges. So the 30K, the 29, call it, to the roughly the 40K was an accumulation zone. Even after a violent head and shoulder move that we called, that made it to that wick low, We said, buy here along the wicks. We are thrashing out lows, accumulate, and we traded leverage long the breakout of the falling wedge, only for it to go to 69K with one rest period over here. That further validated the 42 that we've been talking about, which came into relevance with the short where the average price was 42K. Then most people have extended this over, and I've drawn it as well, but this is different. The price levels are the same, but the difference is what structure and manner are you coming back down into this level. So this was all support for the 42. Then you came down here. We said in our channel and repeated that this is not bottoming structure. This is not a continuation for up. There were a number of reasons. Number one, you made only a marginally higher high, 64 to 69. By the way, that invalidates. I know, I love Richard Hart, but he keeps saying, I called the top of Bitcoin at 64. No, you didn't, bud. Your stop would have had to have been at 64. You would have had to trade the head and shoulder short or had some point of entry. And then you would have been right up until 30K and you would have been stopped out over there. But anyway, small point of reference. You can't trade like that and allow something to run 4,000, 5,000 through your high. You would have been out. You would have closed. And if you didn't, what's your money management like? How far would you let it go? To 100? Anyway, that point aside, this support box even extended. I should have extended this pink box to cover the 42 up till this point, because you got support on the head and shoulder here for your two armpits, armpit 1 and armpit 2 on this blue head and shoulder that I've highlighted in blue. You have a live triggered head and shoulder that had a kind of bear flag already here that we warned was potentially bearish. So we've been bearish since the mid 50s on the 69, and we were concerned the minute we failed to make a new high, this rising wedge that started to break down, that was a point of concern. You don't want to reverse at 69 on a previous high of 64. Would have been much better if you had reversed on 60 and come down. You have a chance of an upside continuation pattern. So the only bull scenarios were, can we have a rising wedge upside squeeze? And that's also dangerous because rising wedges generally break down. So it would have been very precarious. So there were a lot of bear warnings. We said the marginally higher high, we already warned. Then you get the sell-off. Then you get the bear flag and the bear flag triggered. And then you have flagging again, and I'll put it in black so it really shows. You had flagging again on what was a legacy accumulation zone. Now there's a massive difference in a bull market breaking through and coming back down on a continuation pattern, falling wedge, to imply further upside. So it's just a resting post, to setting up a bear flag after a major selling down leg on that same zone. So we predicted you will run that level, and you will invalidate the legacy support levels of this. All that's now happened. Now, how do you break a key technical level? With momentum. So it's like a horse running to jump over a very big fence with a water trap as well. You know, this 28 to 32K area. Think of it as an obstacle, a high fence with a water trap and everything. It's an obstacle for the horse. He comes with pace. So what do we say in HVF method? It will be broken with momentum until it is completely invalidated. Thereafter, you rally back up into the new resistance as a rally to be shorted again for further downside. Do you understand that? I'll repeat it one more time. To clear a major obstacle that has been technical support for an extended period, since even 2020, when you first broke, you will rally, you need to hit it with momentum. Did we break with momentum? Did the HVF method's laws hold? You tell me. You came out of your basing ascending grind line, which is the lower fragment of a bear flag. We break everything down into fractals. Sometimes you don't get the upper fragment. Sometimes you just get the lower fragment. So you can we really atomize to molecular level price behavior. Sometimes you don't get that. Sometimes you just get the lower line. You squeezed up. I tweeted at that point, extremely precarious moment for Bitcoin, because if it spilled there, I expected it to run all those supports and to do so with momentum. What happened? The narrative catches up. You broke, you pull back to the 40K round number level. So let's drop the time frame and take you in that, and then you spill. And so what does this mean? What am I telling you it means for the future? You're going to have a rally and it's going to sucker everybody back in. Bottom callers unite. Michael Saylor will be doing his damnedest to convince everybody there's never been a better time. All the long-term belief system and narrative system driven people who are not students of price behavior, to the extent that HVF method people are, will all be saying, this is your great opportunity to buy Bitcoin on a discount. You broke, rally, met the 40K and died. You actually have a triggered head and shoulders with a right shoulder there and the head that we've drawn for you in the blue. You have a triggered head and shoulders that has a downside target of 15K. You actually have a bear flag that has triggered. Now I place slightly less store, but flag targets can perform too. But the probability of outcome is more variable. But it's such as the nature of the spill, I expect. When I look at the NASDAQ, still to make its head and shoulders target. Good form, proper triggering, increase in volatility on the right shoulder. We study volatility, volume by price on head and shoulders with complexity. Nobody does that to the extent we do. So listen to us, because no one's listened to us and they're all hurt. What will happen is you're going to get a rally and I expect you will go further down. And there's only certain ways things rally. You will get a bear flag, you will get a rising wedge, or you could have a snapback. So there could be some violence and then dump, and then a weaker snapback, and then a calming, and you set up an inverted structure. I've given you 3 examples. There are others. If you want to learn more, themarketsniper.com. Yeah. We'll be watching and we'll be capturing this. Now, let me tell you, if you caught a 30K short down to the likes of 15,000 and you had a 30.5 stop, you would have a risk reward trade to die for. But am I going to advise people to do that who haven't been through our training, that don't have the support of a community, and do not have everyday media updates from me, webinars from my trade Top Gun people like you, but are 3, 4, 5 years into trading HVF method and updating? I wouldn't. But if you have that level of support, you could be able to do it. And you could rip through the materials and understand also what you're doing while you're doing it. So we're not giving you fish or catching fish for you. We're teaching you to fish while we are all fishing together in the same sea and circumstances. So you have hand holding, but it's your trade. Own your own outcome. So rallies and then a further spill. Now I'll show you going back up to the bigger time frame. But if you made the head and shoulder bear target, and remember, it's still an if. There's probabilities with everything. There are no guarantees, but there is a triggered head and shoulder. By the way, this 69 is higher than the 64. This is the apex high for Bitcoin at 69,000. And this is the first significant reversal. We are on a 2-day time frame. This is not some Mickey Mouse 15-minute pattern that I'm throwing at you. So it should be taken very, very seriously. And how do you invalidate it? I said repeatedly, even when we were wrong, we didn't like the structure and we said this should be bear. We said this should break down. What happened? The FOMC happened. They were on 0.25. They're 8% essentially behind inflation, 7.75% behind inflation. They didn't announce a date for the quantitative tightening, even though they were supposed to. They were well, it's expected. And instead of doing 0.5%, they did a 0.25. The market said, these guys are not serious about chasing inflation. Long live the inflation trade. Gold went up. We were wrong there. And on Bitcoin, we said both cases, they should go down. How much further did it go up? Marginally higher high, just like your 69. Instead of giving us an inverted HVF, it extended into a bear flag. It died exactly on our level. This level is 47,000, by the way. That was the neckline of this head and shoulders. Key levels playing out everywhere. It went to the 47,000 and died, 47.5. And it died hard. It didn't hold long on the 42. It broke down, rallied back up and over it, and then squeezed. And we said, this is it, guys. That was your run. And guess what happened? FOMC came second time. Now they're going to tighten next month. They told you, June, they're going to take 100 billion of liquidity out the system, and they're up by 0.5. It's still garbage. It's still too low. They're still a million miles behind the curve, but that's twice as much as what they said. And more important is the quantitative tightening. Things are going to break, my friends. Things are going to break. And when things break, people don't have money. And things that can be sold quickly online for money get sold. Not because they want to be sold, not because they deserve to be sold, because they freaking have to be sold. There have been institutions that were forced sellers at the bottom of 2009 because people called in their balance sheets. There were people being laid off. Close your positions, end of a job. But this is going to be a 3x in 2 years' time from now. Sorry, mate, you don't even have a job anymore. Never mind that. Positions closed, pack your things. Forced seller. You don't pay your rent, you get thrown out. Do you sell your Bitcoin? You sure do.
This is what we're waiting for, by the way. That's what I think we're moving into. I mean, I'm in the UK. I get a feel. I know I've got lots of friends and family here. Everybody's starting to feel some sort of a squeeze somewhere that cascades, whether that be through energy. And there's so, I mean, we could talk for hours and hours and hours, but you're also calling for a commodity super cycle. Is that correct?
Correct.
So that weighs into everything.
Remember, they don't ratchet both agendas at the same time. It's a left, right. So think of the political system. In the same way, the market has two essential trades right now. Inflation trade, fear trade. You are currently on the fear trade. You're going to get a small amount of respite. That doesn't mean you should chase into the inflation. I don't think it's going to be too long. I think you want to stay macro with the fear. Don't be too smart with the fear trade. But by the time we're in absolute pain and misery, the fear trade is going to be very aggressive and harder than it's been before. The Band-Aids and the medicine and the love is going to come much later after much more pain. There has to be much more crying. They have bought the license to break the system, and they will succeed. They are provenly capable of doing exactly that. And it is super fragile after the events of March 2020. Even on top of what it was before, where it was already super fragile. So they will break the system. The resulting action post breaking the system is when you put your inflation trade back on. That's your uranium. That's your uranium stock, Sprott fund. I mean, as I say, I'm going to be talking to Rick Rule later on today. Then there'll be gold, silver, and then also the crypto survivors that have real models that haven't been exposed. Be careful during this period on all stable coins. You mark my words, someone is going to raise the issue of treasuries as collateral on USDT or something else. As long as those debts keep going down, what if debt goes to naught? You're sitting with supposed collateral for stabilizing a stable coin on collapsing collateral. And let me tell you, it was far less risky than having Bitcoin as collateral with a 15K where it traded 69 and you're in a bear market. So clarifying, Bitcoin in my on balance of probability scenario rallies into that box that is the accumulation zone in some form. I've drawn a flag. It could be a rising wedge, it could be a number of things, and only later to be slapped down and continue. I will also highlight another key level that you will revisit in your journey that is on there as a purple line. And that was the original first cup gold nugget target that we told you. You had 2.5 years of continuation pattern that generated a 25,750 target. Let me just put on the weekly to remind everybody of that. We called this was the last macro move in crypto. You can go check the YouTubes, and we called it the first cup gold nugget because it broke early. From here, we were waiting for, will you get a bigger third impulse? Will you get a little bit of a dip down before? And then we realized because of the COVID selling that was so extreme into the second low there, you had very little that needed to get out. They'd all been flushed out. Anybody who got back in had got on for the long ride. And you ran all the way up to 25K and continued to 64, as you know. But this is a key target level. I would expect to see the rally here, and then you will probably run that 25 Remember, 25 is also a quarter of 100,000. Everybody's loved going out 100,000. It's a very metric number. When you run 25, you could go to 24 something, 23 something. You'll probably have maybe a rally there. This is a key cluster of levels. But the end targets for this that we have on a head and shoulder, it's not an HVF, so it's strong without being super strong, is 15K. And the possibility of overrun, and I do think pain is huge, you could see 12. And if you were to go nightmare scenario, so the NASDAQ actually has a 60% from all-time high or a 50+% all-time high, is you could run into this funnel zone. That's the nightmare. And again, that's not a prediction. It's possible. It's in the realm of possibility. What kind of number do I associate to that? I have no idea. But I do think the chances of the 15 is pretty high. This could see you trade anywhere of 8, 9, 10. And a real ugly event would be I wouldn't want to see us trade below the 8,100 and run that funnel on the first cup gold nugget. That would be an extremely ugly. So, but 15 is certainly first major level. The bear flag, I don't trade bear flag targets personally. It's not high confidence enough for me, but it's possible. And if you have a spill wick, don't forget, no one saw trading sub 4 when you were here. We called this and said, this is a localized high. You're going down. Look at all of these selling wicks. You can even see them on the weekly. You don't need to be on the monthly. But no, I didn't think it would go to 3,900. We had traded 14 there. I didn't think you would see 39 again. At 69, people don't see 10 or 12 or even 15 as being likely. So when things get really nasty and there's real pain, forced sellers. MicroStrategy, what do? Their net purchase, I think is 32K. Is it 30 or 32K?
And I'm sure they've got credit lines that may get tight,
They get margin calls at 21.
Yep.
They start getting margin calls at 21. It's better that they reduce their position if there's going to get some margin calls. That's a big seller that might want to pass some of the risk on to other people and think, well, we can always get back in, lower down if this is going to continue. It's squeaky, sweaty bum cheeks time for that company. You're talking about someone who's almost bet the whole company on Bitcoin. A lot of people might lose their jobs. He's not going to be a popular guy. Some of the board members probably raising their eyebrows right now and wondering, we hope this stops. What is the most bullish scenario that could happen that doesn't involve 15K being run? Or
just quickly before you talk about the bullish scenario, by the way, Francis, all of these targets that Francis is looking at, one thing you should be asking yourself is, why not? Why don't we get there? Because if you ask that question, you'll very quickly realize that there's actually no reason that this doesn't trade down at those levels. For now, that could change, but as far as the picture looks at the moment, that is not only probable, it's certainly possible, but there's no alternative argument, I don't think, yet to suggest that that isn't the play.
You're absolutely right. Why not? On what basis? Who's going to be the buyer? Who's sitting on tons of cash that wasn't already in, that is now going to get in? So the bull scenario on Bitcoin and crypto could be something like this. You get down, you have this rally. So we have a wee rally here now. Let's say it's a flag. Could be a rising wedge, could be a number of things. We've given you a couple of examples. Then you have a final route selling and you maybe get supported there and it just doesn't go any further and it starts to churn and gestate. And then you end up with a descending megaphone structure on a macro bull pole, and that'll eventually set up runs for the upside. But you'll have a sustained period of calming down that will need to take place. You'll probably have some interactions with our splitter here. And that's the best scenario. And that could see the head and shoulder not perform to 15, which is why we say there's no guarantee just because you have a head and shoulder that it gets there. But that's one mechanism. And you need the selling leg to work its way through. And this will all be part of the correction. But does the current market, so that could be a 5-wave selling. So that would be a AB, a BC, a CD, and then a second rally, E, and then a final capitulation. In there, and then you start to base out, you get some inverted head and shoulders, and you slowly crawl back. And that could happen at, say, the 21s, 23s, and MicroStrategy might just miss their margin call and survive. So that can happen too. And we've seen these kind of structures on the stock market, on the S&P a lot of times, and macro, then they pull. And that we'll see when we have peak fear and everyone has given up. And crypto was just a scam. I was hoaxed. I've lost all my money. You just want to see anger. You don't want to see any dip callers anymore. That's possibly when the bottom is. I'll be watching the volatility index. I'll be watching the volume profile according to patterns. I'll be drawing pattern structures. I'll be scenario casting. I'll be thinking the unthinkable when people are most miserable. I'll be thinking bullish. When everyone was most bullish, I'll be thinking really miserable. Catching a falling knife is not contrarian. Oh, so many bears around, people should buy. No. On what basis? Where's the price behavior? Where's the pattern structure? Where's anything? You can't just have a stab on sentiment. That's not trading. That's flipping gambling. Anyway.
Absolutely. No, Francis, guys, I would suggest you guys actually rewatch this video after watching it the first time, because you do not get this anywhere else other than today on this channel, and of course Francis's channels over at the Crypto Sniper, the Market Sniper, and of course the Reset Sniper, which I think is only on Odyssey now, because of course YouTube have to monitor and watch what is and isn't being said if it doesn't fit a certain criteria. But so many pearls of wisdom in this. Is there anything you want to close on, Francis? Because we've taken up quite a bit of your time already, and I know you're a very busy guy.
Trading isn't life. Don't let it dominate your life. If you're hurt right now and you're really depressed, recognize that your health, your family, being able to breathe, live, and have freedom of movement is important. You need to be as awake as you've ever been in these times. This is a time for alert, shrewd, rational thinking. And you should be aiming to be building wealth, and you should be preparing for a different world environment that would be pretty unrecognizable in 5 years' time. Those that are wealthy, those that have the right structure, those that can arbitrage a number of different existences. In terms of my reset preparation, we're doing a lot for people on reset, foundations, corporations, inside of key zones and areas where they're tax protected, incentives. I mean, I'll give you a small example. We're buying properties with 30 years of no property taxes, with 10 years for anybody who works out of that area, no personal taxes out of that address. And there's a third incentive, and there's so many, I'm almost forgetting them. And you can work out of there. That can be one reset location. You can have reset locations where you're entirely independent of food, water, from all forms of government and extraction. Watch out for the health-based risk. Bill Gates hasn't gone away. They're actually trying to recycle them. So reset conversations. It could be fairly dystopian. Remember to see the joy in the times. Seize happiness in every moment. I laugh, I am whimsical, I am almost childlike in many ways. I cackle about small things. I see the criminals coming, and it's game theory. Life is just one big game, and you get to be hard on your principles and affiliations to principle, and soft on your political affiliations. Hold firm to principles over affiliations. And I do that in my trading, and I do that in my truth seeking, and I do that in everything. Treat others well, and then at a corporate level, treat the scammers and the extractors as brutally as you can legally get away with without creating harvest for them. Do not feed the beast unnecessarily. Do your bit to undermine it and save your family. That's a very reset message. Be careful out there in crypto land. It's not over, but rallies could occur. And I would be expecting a next leg of selling, especially in this environment. You've got one leg, you've got one key rally point, and you've had another leg. This begs for a rally leg and a fifth. Ellioticians will love me for saying that, selling leg. So watch out. And that's it. Thank you for having me on the show. TheMarketSniper.com is how you engage with us and have regular media updates with both me and my Top Gun stars on an ongoing, regular basis with real setups. It's also a learning environment. It's a reset environment. It's a crypto environment, and it's a traditional markets environment. Watch the Korean won and some of the other things. Watch the debt markets. The debt markets are the key, and the Forex system is the release valve for the pain in the debt markets and the various differentiations in rates. And that is driving. Macro has been driving crypto recently, and that's what so many people got wrong. Thanks for having me.
Thank you very much for coming on, Francis. It's always a pleasure. Hopefully we get the chance to speak to you again. And guys, what a video it has been. Thanks a lot, everybody. See you in the next YouTube video.